Hey everybody, Economic Ninja here. I hope you're doing great. Well, this is it. Things are starting to turn and there are interesting times ahead. September has just started. It started on a rocky start and we're going to go over a handful of stories and talk about this. First story is out of Zero Hedge. U.S. futures slide as global market rout extends for the second day. Now this story came out the other day and we saw a couple of days of really bad information. And the stock market went down, crypto markets turned down, and check this out. It says U.S. stock index futures fell, pointing toward a continued sell-off on Wall Street after a slump Tuesday when dire manufacturing PMI and ISM data led to renewed concern that a recession may be looming. I got to be honest with you, I'm very surprised that we keep talking about this recession. We are already in one. Most people do not understand that a recession is actually called by the start and the ending of a recession by a committee, a group of people that say, okay, it's official, a recession has started. And by the time they say that, it's based on historical data. And because we saw the president come out and say, oh, I'm just going to change the definition of a recession, even these committee members get confused. What am I supposed to say? What am I supposed to do? Yet when the GDP gets revised upwards because of insane government spending, you have to remember that they're spending in a deficit. That money is not there. As a matter of fact, you even see one of the calls for Democrats to raise taxes. Think about this. One of the calls just recently, K-pop said, hey, you know what? Let's raise capital gains 28%. And everyone's like, well, that's so much better than what Joe Biden said because he said 40%. I want to remind you, because they keep saying the rich will pay taxes, the rich will pay taxes. Well, this is exactly akin to what happened when income tax started in the first place. In the beginning, when they said people are going to be taxed on their income, don't worry, it's not for you. It's for the rich people. And what they did is they said, this is how much the rich make. And then what they did is they just started defining the rich as lower, lower, and lower. And that's what they do. They get their little talons into your money, the hard-earned money that you go and make, and they're taking out bit by bit. Some of it comes in income tax. Some comes in sales tax. Some of it comes as a luxury tax if you own a pool because it's too darn hot outside. The point being is they're getting their talons in. And what's very important to note is that when K-pop comes out and says, hey, I'm only going to raise a capital gains tax to 28% instead of 40%, I want to remind you who pays capital gains tax. Anybody that owns a stock and sells it. Anyone that owns a home and sells it within certain parameters. You have to understand that a majority of Americans pay capital gains tax. And when they are faced with the situation where they have to pay more taxes, they're going to back up and go, you know what? This isn't a very good idea. We need to stop this. We need to stop paying these taxes. Let me get back to my email so that I can see what the next story is. Sorry, we've been in Europe for a couple of days and it's a little bit crazy as far as internet is concerned. The next story out of Zero Hedge is entitled Risk Facing Bullish Investors as September Begins. Now, remember, September is historically a time of stress, of pressure. Oh, now she stops talking. Stress and pressure. Historically, stock market downturns happen in September. And just in the beginning of September, we saw this multi-day rout where selling was happening, right? It says here, since the end of the yen carry trade correction in August, bullish. I don't even know what she's saying. It says here, since the yen carry trade correction in August, bullish positioning has returned with a vengeance. Yet, two key risks face investors as September begins. While bullish, I can't even hear myself think. Is the train coming? Oh, now she stops. Every time I stop, she stops. Let's see what happens. It says, it is true that a rising tide lifts all boats, meaning that as the market rises, investors began to chase higher stock prices, leading to a virtual buying spiral. Now, this is something I've talked about many times before. Most investors don't invest at the bottom. Even then, most investors don't invest midway up, whether it be a stock or in the real estate market. They always invest at the last 2/3 of a move. And then as it dips, they start to justify it. They're like, oh, it's just a small correction. Don't worry. Everything's gonna be okay. And then it comes back down a little bit more like, well, I can't sell now. I've lost too much. I'd be down way too much. And then as it goes down even more, they move into depression. And I believe that's what they're seeing, what you're seeing. In the last handful of months, I've been telling you how I have been positioning myself in cash. I have been slowly selling stocks. Over the last 6 months, I'm moving into US Treasuries. I was already in money market accounts. I was selling things, stocks, cryptos, and things like that, because as we move into a recession, the only thing I have not sold is physical gold and silver that I have stored, okay, in vaults. That's the only thing I have not been a seller of. Now, even though I know that the price of gold and silver comes down when a recession begins, that is not, we are already in a recession, that's what I believe, but when the powers that be tell you we're in a recession, because everything starts to sell off. People move to cash, investors move to cash, hedge funds move to cash. That's how it is. I understand that the dollar is losing value and it's going to continue to lose more value. However, in the interim, you can't deny the fact that cash is king, right? It's just like right now, you go onto Facebook and all you see is more and more Lamborghinis for sale, Rolexes for sale, high-end speaker systems for sale. It is absolutely insane. So you have to realize that. And so, excuse me, when markets start to move up, simply because a lot of retail investors are buying stocks, it doesn't mean that the company has a better outlook for the future. As a matter of fact, it's the opposite. More and more companies, even the dollar store and Dollar General and things like that, they're sitting there going, hey, the outlook is bleak. It's not looking good. We're losing our customer base. When McDonald's comes out and says we've lost our normal customer because fast food is now a fine dining experience because a Big Mac, meal costs $18, you have to understand that things are deteriorating fast. Home Depot, Lowe's, and other companies like that are sitting there and they're telling you things are not looking good. Now, given that for every buyer there must be a seller, this data confirms that buyers are increasingly willing to pay higher prices to bring sellers to market. That cycle continues until buyers willing to pay higher prices decline. Now, we've seen that with the housing market. As a matter of fact, we've seen, even though interest rates, mortgage rates have come down, the buyers aren't there. They're not showing up because now they're starting to see these massive price declines and they're sitting there going, hey, you know what? Unless you're in a town like one of the places where I live, where there are so few homes for sale because it's such a small market, but in the large cities like Austin, Miami, San Francisco, all these large markets, even Boise, Idaho is having issues where there's a lot of inventory hitting the ground. They're starting to have these massive price declines. I've said this before, I saw it again a couple weeks ago. I saw a $1.2 million property hit 60 days on the market. They immediately took $200,000 off. Now, I know you may be thinking, Ninja, I don't care because I can't afford that house. But you have to realize in the housing cycle, these cycles hit and they sit there and the highest price homes start to fall first. And then it just gradually comes down lower and lower in price signals. Hey, I'm going to throw out a discount link if you want for the Mortgage Master Course. I'll put it down below, 75% off today. That's if you want to buy a house right now or you want to refinance. I'm trying to show people how to save thousands and thousands of dollars on, I'm going to show the next article coming up here. I want to show people how to save thousands and thousands of dollars on their next home purchase or their refi. Airplane. Lastly, I want to point out the Atlanta Fed president, this is out of CNBC, Fed President Bostic says officials can't wait for inflation to hit 2% before cutting. It says here, Atlanta Fed President, I hate these pop-ups, Raphael Bostic signaled Wednesday that he is ready to start lowering interest rates even though inflation is still running above the central bank's target. This is important to know because the economy is begging for rates. I'm done. Begging for rates to be lowered, and the Fed doesn't want to be the people that are blamed for the crash. And that is what's going to happen. If they don't start lowering rates sooner than later, they are going to be blamed for some kind of crash. What they can say though, and this is what's really important, and every time the Fed, when things go really bad, start lowering rates ahead of time, the market actually doesn't signal a crash until months and months after the Fed has already lowered rates because they're following the 2-year bond. And that is very, very important to note. And again, remember, as they lower rates, other asset classes are going to inflate, and then the inflation data is going to make its way, the inflation numbers, the real true rising of assets are going to make their way through to energy and food. And that is the one thing that is going to cause a horrible crash in the future, because you're going to have a mini hyperinflation, like I've been warning everyone before. I hope you guys got something out of this. With that being said, if you want to take a look at Mortgage Master, 75% off today, discount. Have a great day. The Ninja is out.